My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I'll do my friends. I'm just trying to make a little money. My job, not just to entertain, but to explain everything. So call me 1-800-743-CNBC. Tweet me, Jim Cramer. When you watch those debates, when you hear the rhetoric around the presidential election, there's really only one issue that pervades the discussion, right? And it's inflation. I know the Federal Reserve has done its absolute level best to keep inflation in check. But even if prices have stopped rising so rapidly, that doesn't mean that they're coming back down. More important from our perspective, inflation is front and center in the averages, where the inflation-addled Nike held back the Dow Jones Industrial Average, which advanced just 40 points today. S&P inched up 0.01%. NASDAQ edged 0.08% higher. Yeah, inflation's a funny beast, isn't it? Nobody wanted to claim the inflation mantle, but I think the undercurrent behind Nike's plunge into the crevasse of mixed quarters is all about inflation. It's emblematic of how higher prices are changing the face of business, and it's not changing the face nicely. Nike, under now deposed CEO John Donahoe, a former tech executive laid of service now, decided to go heavy into e-commerce and at the same time to go heavy into price increases. Probably seemed like a good idea when it took over, just as COVID sent us into lockdown. Besides, why show off your best stuff at Foot Locker and Dick's Sporting Goods? Why give them a huge chunk of a sneaker gross margin when you can capture it all yourself at Nike Direct? It's a thoroughly technological approach to boosting earnings. Just one problem. Something a shoe guy or maybe an athlete would have known instinctively. In a more frugal moment like we have now, with a beleaguered customer, people aren't paying 200 smackers for a pair of sneakers, at least without trying them on first. I say Nike meet the new consumer, the one who's had it and doesn't want to take it anymore. The consumer who feels ripped off, price gouged, and has reached the limit of what she'll pay. Unfortunately, many Nikes are now beyond that limit, especially if they turn out to be not your cup of shoe when they come in the box. Now, I know politicians are trying to cash in on this price gouging notion. Vice President Harris even proposed a ban on price gouging. I don't know how that'll work, but I do know what will work. A savvy consumer who's beginning to upset the entire scaffolding of price hikes that we've been hit with since the pandemic. Those price increases are going to have to be rolled back in one way or another, or your CEO is going to get rolled, just like we saw at Nike. I don't think it's a coincidence that another CEO, Luxman Narasimhan, late of Starbucks, lost his job during the year of the $7.25 pumpkin spice latte. That's another tripwire that the consumer wants to sever. Cups of coffee priced like their lunch. I'm seeing this everywhere. Last night, in an interview with interim CEO of Chipotle, Scott Boatwright, and the new president and chief strategy officer's former CFO, Jack Hartung, well, we discussed this.
There was a pullback from the consumer. So I think it's more of a macro resistance to inflation in general in California. But we watch that stuff very closely because it's the three things. It's, one of the three things is affordable. We're not going to give up on affordable because we don't want just some people to enjoy Chipotle. We want everyone to enjoy Chipotle.
The ubiquitous pricing issue came up again with Brendan Foley, CEO of McCormick, when we talked about the appeal of spices.
Consumers are looking for value, and we think we're doing the right things across our business to do that. Flavor is a small part of the cost of any meal, but it has such a big impact. And so we see a lot more consumers now shopping around the perimeter of the store. They're having to flavor a lot more of their meals because they're making it from, the produce department or buying new steak, and they need Montreal steak to flavor their steak. We're finding out that what's really working with consumers, particularly as they're thinking a lot more about their spending right now. They want to try new flavors. They do want to explore, but they may not want to spend as much as they would normally do. So they'll put out $1 to try a new flavor, and that's what we're finding is really working with these minis with Frank's. And so this is a small version of what we have up there. I love the creamy buffalo, and we're seeing a lot of turns from that.
I mean, come on, this is incredible. People are staying home and sampling hot sauce because they want to simulate the experience of what they used to be able to have a nice dinner away from home. It's not just too expensive to buy Jordans without trying them on. It's too expensive to regularly go out and eat at most places, with the possible exception, say, of inflation-fighting Wingstop. When you raise sneaker prices too far, your sales go down double digits. You keep prices the same, well, Wingstop, you get double-digit gains. And that's why Nike stock is down 23% for the year, whilst Wingstop's is up 65%. Yes, you give the consumers a bargain, your stock soars. Well, everyone's mad about inflation. It's the kids born starting, say, in the late 90s who seem most angry about it. They're now part of a jaundiced workforce where they have to compete against a slightly older generation left behind by COVID. Plus, there's the prospect of artificial intelligence making all sorts of white-collar jobs perhaps disappear. The unemployment rate for working-age members of Gen Z is almost twice the national average. Some portray them as a group of daytime video gamers who like to fritter away their money on DraftKings. I prefer to think of them as people who want to be able to afford what their parents could, but in part because of inflation, they may no longer find that possible. They do what I call loud budgeting. They don't want to do it, but they kind of have to. Most companies are still in denial about pricing. When you read through the reports of, say, Brown-Forman, the liquor company, redoubtable maker of Jack Daniels, you think it's weaker sales or some sort of kind of a mystery. But the fact is, liquor, after multiple price increases, just got too expensive, especially when you go out. I'm not picking on Brown-Forman. You don't get a 22% decline in the sales of Diageo's Casamigos tequila by keeping prices lower, do you? However, you aren't going to hear Diageo say, oh, my holy cow, I mean, we took prices way too high. We better take them down now. The liquor companies are pondering that perhaps Gen Zers want to be healthier. Maybe they finally realized that alcohol is unhealthy. But higher price? Oh, they'll never make that the issue. Except it really is, because inflation is insidious and often seems invisible to the very people who've been putting through the price increases. It's a shame they're still in denial. Unlike many other companies, McDonald's was quite vocal in accepting that maybe it had taken too much price. They told it to me. They said, well, maybe we didn't do this right. Their decision to extend the $5 value meal deal beyond the summer, well, that was very well received. And not just by Main Street, but by Wall Street, too. Do you think it's a coincidence that this stock's now run from the 240s to 303 since they decided to roll back prices for good? Those people, highest compliment. They got horse sense. Companies are so reluctant to take prices down because they don't want to hurt their treasured gross margins. But I think it may be time for a giant reset. Again, there's a reason why companies that offer real bargains have seen their stocks soar. Amazon up 22%. Costco, 33%. Walmart, the real enemy of the gougers, with a whopping 53% run all this year. Funny enough, if you keep prices low, you can indeed make it up in volume, because the consumer's a lot smarter than some of these companies are ever willing to admit. So let me give you the bottom line here. The politicians can toss invectives at each other and get on their proverbial high horses about who's price gouging, but I think we'll look back in 2024 as the year when the public took matters into their own hands and stopped buying goods with inflated prices from stores that refused to lower them. The result? Fired CEOs and crushed stock prices for all those who refused to heed the thunder of those angry consumers who finally just said no to the scourge of inflation. Zeb in Texas. Zeb.
Hi, Jim. Thank you for having me on. I'm a big fan, and I appreciate all that you do to educate us and help us win.
Thank you.
My question is specifically on Royal Caribbean, ticker RCL. Over time, I've been able to build a good position in RCL with a cost basis of less than $60. I also took some profits recently. I'm also heavily invested in NVIDIA and the whole AI trade. But I'm a bit confused where to invest, and I'm contemplating moving my money from RCL into NVIDIA. Which one of the two do you think will run faster and has more potential to grow?
Why choose one or the other? You've got a terrific, let's say, excuse me, duo of stocks. Royal Caribbean is a great play on the consumer and a terrific situation. NVIDIA? I'm so sorry. NVIDIA? Well, we just heard that demand for Blackwell is insane. So let's keep them both. I think we'll look back on 2024 as the year when consumers took matters in their own hands and actually said no to inflated prices. And the result for those who aren't listening, fired CEOs and lower stock prices. On Man Tonight, I'm checking, oh boy, I'm checking in with Cloudflare's. I work no matter what. Cloudflare's top brass fresh off the launch of new AI tool and finding out more about its role in election infrastructure with just over a month until the big day at the ballot box. Then the company behind Slim Jim and Vlasic fell earnings. Well, they saw its earnings miss, but maybe it's a chance to buy. Could be. I'm getting on a read of the packaged food space with Conagra CEO. Plus, do not miss my exclusive look at Levi's latest numbers and what a new celebrity-driven campaign could mean for this apparel name. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.